Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo, coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Emerging market stocks crawled higher today on hopes of a resolution to the trade dispute with China. MSCI's index for emerging market stocks edged 0.3% higher, putting it on track for its third month of gains in a row. Now, South Africa's JSE All Share also in positive territory on the same news. We saw resources and gold miners were leading the gainers today. Results, of course, continue to flow in. Woolworths announced that group sales increased about 2.2% in the 20 weeks to November 17th. But of course, the retailer's share price was down almost 2% on the day. And lastly, in Egypt, the market continues to announce new IPOs. Local firm Rameda Pharmaceuticals announced plans to float about 49% of its shares on the exchange on December 11th. Now, also coming up on the show today. Anticipated Christmas shopping pushes business confidence in South Africa to a 2-year high. Zimbabwe still grappling with land policy 2 decades after it began repossessing white-owned farms. And the secret ingredients in a West African chocolatier's success. Well, let's start off today's show in South Africa. The country's business confidence has improved for the first time in 2 years. The Rand Merchant Bank Business Confidence Index, compiled by the Bureau of Economic Research, was at 26 points for the fourth quarter of the year. It was previously 21 points in the third quarter, which of course was a 2-decade low. Now, the confidence has been attributed to recovery in residential activity, as well as expectation of a good shopping season for retailers. Now, the survey comes close on the heels of an IMF warning on the country's fiscal position. Ratings agency S&P Global has also downgraded the outlook of the country's credit rating to negative. Let's get more insight into this from Sumitra Naidu. She joins us now in Johannesburg. Sumitra, always great to have you on the show. Now, though we saw this index saying that business confidence basically improved for the first time in 2 years, we're hearing analysts saying that sentiment still remains deeply negative in the country. So what then, Sumitra, does this spike in RMB's index come from?
Yes, well, Uche, some would call it a very superficial rise. So the business confidence index jumped to 26 from 21 points. That's a 5-point gain, which in most normal circumstances would be great news. But this is not the case, and it's nowhere near a celebration. With most other indexes that track some sort of economic activity, the critical point is 50. Now, anything above 50 suggests expansion, and anything below means a contraction. So even though we jumped 5 points, now at 26 index points on business confidence, it's really a long way off in terms of any progress. This index would need to record several positive readings like this one in order to show any real difference. In this round, there were improvements in 3 of the 5 main sectors: building, manufacturing and retail trade, but levels of confidence declined in new motor trade and showed no movement in the wholesale trade sector. So while, respondents are feeling slightly more positive, they're still very concerned about the economy, a possible recession, and even a ratings downgrade. Uche?
Well, on the ratings downgrades, of course, these ratings firms have been sort of giving a sense of the temperature in the country. Now, S&P downgraded the outlook to negative from stable recently. Now, today, the Reserve Bank said that if Moody's does go ahead and cut its credit rating to junk, there could be a sell-off of about $8 billion of South Africa's bonds. Does it look like Moody's will follow suit and suddenly cut the outlook further?
Well, I think the sell-off would be a lot more than $8 billion. Moody's is the last remaining ratings agency of the 3 main agencies that rate South Africa to have us still on investment grade. Their next move is likely to be a downgrade. Just when that's going to come is the big question. But they just put South Africa on negative watch. Once the sovereign is downgraded to sub-investment grade, it will immediately trigger capital outflows. South Africa will then get kicked off the World Government Bond Index. And of course, credit will become almost inaccessible and unaffordable. However, Moody's in particular believes that the new leadership under Cyril Ramaphosa is trying to reverse a decade of fraud, corruption and mismanagement. They do understand that this kind of recovery and rebuild will take a long time, and they're still very bullish on the opportunities that South Africa presents, which is also why South Africa has escaped previous downgrades. But with debt at over 55% to GDP and a near zero growth, they are growing very concerned that this leadership doesn't have the muscle and the political will to actually revive this economy in the near future. And investors are growing wary too. There's been $7 billion worth of capital outflows this year to date. It's very worrying. Uche?
Now, the IMF is also sounding those urgent alarms over South Africa's economy. It's pushing for measures to address fiscal and state-owned enterprises' challenges, as well as stabilize the government debt. Now, the discussion, an interesting discussion going on right now, is South Africa edging closer to an IMF bailout? What exactly are the experts saying, Sumitra?
Yes, so, the former IMF chief, Christine Lagarde, was in South Africa last year around this time, and it was then already that speculation was rife that talks were underway around a loan from the IMF. But both Lagarde and, at the time she spoke with the South African Reserve Bank Governor, Lesesha Kganyago, both of them said there was no request for a loan. The IMF said that it would step in should South Africa need a loan, but it didn't ask and it didn't think that South Africa needed one. Now, most economists say an IMF loan is a possibility, but they do believe that even though this economic outlook is so worrying, they do believe the situation can be turned around and that we are not there as yet. It can be done without the IMF. There are few experts coming through, though, saying that unless there are some serious changes and urgently, there would be no other alternative. So we saw a bit of a hardline approach with SAA in the last week or so, government refusing another bailout, and of course a big restructuring exercise going on there at SAA. Slightly different, when it comes to Eskom. This is an essential service, crucial to the economy. There's no way government can actually back down on assisting the utility, which means that Eskom will continue to drag on the fiscus because its debt is not only so high, it's junk, and operationally it doesn't have money. So, in order to keep the lights on, government is going to have to continue bailing them out. The situation has become that bad that there's going to be more pain before any good news. Uche?
Well, as always, great to have your insights, Sumitra. That's Sumitra Naidu joining us there in Johannesburg. Well, let's shift focus now. It has been almost 2 decades since Zimbabwe began repossessing white-owned farms, as well as giving them out to black owners. But the country is still grappling with agricultural productivity and equitable land redistribution. Here's CGTN's Farai Mwakutuya with more on that.
Partly violent and chaotic, the land reform program left Zimbabwe internationally isolated, disrupted production on farms, and affected the economy. But it was necessary to address colonial imbalances. In hindsight, though, some acknowledge the emotive issue could have been handled better.
We should not transfer rural dwellers from where they are currently to be rural dwellers in farmlands. Farmlands must be farmlands to produce for the country and increase and contribute to the GDP of the nation.
Achieving that needs access to finance and technical skills.
Smallholder farmers, when they go to the markets, sometimes they enter into contracts with the marketing agents. Sometimes they also enter into contracts with contractors, where they are maybe contracted as outgrowers into a bigger scheme that is supplying maybe the international community. But it is the skills to negotiate, it is understanding business in terms of how to negotiate contracts. Some don't understand.
The biggest contract farming success has been in the tobacco sector, where record-breaking yields and growers have maintained the golden leaf status as the most valuable cash crop. Beyond finance and skills, there's also need for confidence, which can be gained through respect for property rights and consistency when it comes to policy. A land audit to weed out multiple owners and unproductive farmers has been completed, and its findings should inform a more efficient and equitable land redistribution. Farang Wakutuya, CGTN, Harare, Zimbabwe.
And now to our corporate headlines. South African-based airline FastJet says it is in talks to sell its Zimbabwean operations to a consortium led by its biggest shareholder, Solenta Aviation. The company is seeking $8 million. The deal could help the low-cost carrier stay alive until 2021. Now, the company, whose shares plummeted 32% to a record low after the announcement, is currently expecting a loss after tax of around $7 to $8 million for 2019. And South Africa's Public Enterprises Ministry says it is working with struggling state airline South African Airways to ensure that it continues to operate. The national carrier has suffered a crippling strike this month that pushed it to the brink of collapse. It needs a cash injection of about $136 million by December in order to fund working capital for its 2019 and 2020 financial year. And still in the country, South African retailer Woolworths has reported a 2.2% rise in group sales for the 20 weeks ending in November. Food sales increased by 8.8% from a year earlier, while its South African fashion, beauty and home sales grew by 2.8%. However, the retailer's Australian upmarket department store chain, David Jones, experienced a 2.1% decline in sales. And lastly, Fiat Chrysler and Peugeot owner PSA say they will sign a binding merger agreement in the coming weeks. The two automakers are in talks to finalize a merger that will create the world's fourth largest car maker. The deal will create a business with a combined market value of nearly $50 billion. This is Fiat Chrysler's second attempt at a merger this year after it pulled out of an agreement with Renault back in June. And that's a look at our corporate headlines. Well, we are heading into a quick break now. Here's a look at what's still to come. The United Nations warns of a wide-ranging and destructive consequences for the planet if nothing is done to contain carbon emissions, and why there's no limit to what can be made from Lego bricks.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global business, only on CGTN.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible? And why?
Let's get some reaction on ground. Joining us in Johannesburg is Sutra. Hello, Nairobi.
This is how all stories begin. See how they end. Only on Global Business.
Welcome back. Now, the United Nations is warning of wide-ranging and destructive consequences for the planet after greenhouse gas emissions hit record levels in 2018. The World Meteorological Organization is warning that average global temperatures could rise by between 3 to 5 degrees Celsius by the end of the century, and that's if countries do not reduce their greenhouse gas emissions. The data is contained in the latest emissions gap report from the United Nations Environmental Programme. It argues that the goal of keeping a rise in average temperatures to just 1.5 degrees is still possible. But it also says that countries need to cut emissions by at least 7.6% every year in the decade to 2030. Now, the report also points out that clean renewable energy is coming online at a pace much faster than forecast. Last year, about 50 gigawatts of wind power plants were installed around the world. Another 100 gigawatts of solar power plants also came online. However, UNEP warns more rapid action is needed if the world is to avoid another lost decade.
At this time, had we acted in 2010, we would have had to reduce our emissions by 3.2% a year, by 3.3% a year. Now, because of climate procrastination, which we have essentially had during these 10 years, we are looking at a 7.6% reduction every year. Is that possible? Absolutely. Will it take political will? Yes. Will we need to have the private sector lean in? Yes. But the science tells us that we can do this.
Now, earlier, CGTN's Ramanyang explored what unchecked emissions would have on agriculture as well as security in African economies. Here's their conversation with Niklas Hagelberg of UNEP.
And these real emissions are putting us on a trajectory of 3.2 degrees average warming.
Some of the data from the World Meteorological Organization was also interesting to read, because they're essentially saying that the average concentration of CO2 last year was essentially much higher than they actually had forecast. So does that essentially act as a reflection of all the emissions cuts or the emissions reduction measures that we've been talking about for the last decade or so? It sounds like they're not really working as planned.
So this is an interesting one. So indeed, the emissions have been growing with 1.5% every year for the last decade. But at the same time, there has been a lot of progress in moving towards renewable energy, to electric mobility, to better food systems, and so forth. But just the economic growth and the growth of the economy and more people consuming, that has then led to that the juggernaut has just increased its pace.
Right. So a lot of people will be looking at this and saying, okay, yeah, sure, we're increasing a lot more, we're increasing the amount of carbon emissions that are going into the atmosphere. But if you're, say, a small-scale farmer in Africa, in South Africa, in Kenya, Nigeria, what then would change for you between now and 2030 if this sort of emissions continue at this pace?
So last year, the Intergovernmental Panel on Climate Change, the IPCC, came out with a report where they're comparing the impacts of a 1.5 degree warmer world and a 2 degree warmer world. So the difference already is that by 2 degrees, then, for example, virtually all coral reefs would be wiped out. So that means for small-scale fisher folks that kind of use coral reefs as the main source for their protein and food, they would be in trouble. And when we then come into kind of more erratic rainfall, increasing in floods, increasing in droughts, and the predictability has gone, then the small-scale farmer actually also, it's going to be a tougher job to get a good crop, because there's so many variables that may come in and kind of have that direct impact on the day-to-day bread coming in.
So would I be correct in arguing, therefore, that if we're going to see more extreme weather, a lot more drought, a lot more flooding and so on and so forth, that also does in tandem increase the risk of resource conflicts as well, because water scarcity has become a lot more frequent right across the continents too?
Correct. So already now, actually, when we look at the conflict, 60% of conflicts have some kind of connection to resources, whether that's water or minerals or so. So the access to resources and the fair sharing thereof is a cause of conflicts. And if we're going to have a less stable resource base, then there is a good likelihood that conflicts will also increase.
would a carbon tax help in keeping a lid on emissions? Because if you have a price that's essentially reflective of the damage that carbon emissions have down the line to the environment, to healthcare and so on and so forth, would that perhaps help in at least slowing down the effects that are essentially being forecast in this report?
So carbon price is a market-based mechanism that then helps guide consumers, companies to use products that are less carbon intensive. So in our last year's emission gap report, we do believe that it will be a critical element in shifting our economies and human consumption behavior towards low carbon behavior. So a carbon price is a key policy tool and financial incentive that can help us move towards decarbonization.
Well, let's now turn to one of the countries that is a huge contributor to greenhouse gases. China has released its policies and actions on climate change for 2019. The report comes ahead of this year's United Nations Climate Change Conference, which is scheduled for next Monday. CGTN's Wei Jinggrui tells us more.
The road to a greener tomorrow stretches far and wide across China. Officials say the nation cut its carbon emissions per unit of GDP last year by about 46% from 2005 levels. That translates to a more than 5 billion tons cut in the greenhouse gas emissions. Experts say it is the result of the Chinese constant commitment and effort.
Since 2018, China has made great progress in slowing and adjusting climate change, promoting industrial restructuring, coordinating between tackling climate change and addressing pollution, increasing public awareness, and providing aid to other developing countries.
The national carbon trading system has made some of the biggest strides. Since the system went national in 2017, the carbon trade in 7 pilot Chinese markets has yielded 270 million tons of carbon dioxide. It contributes greatly to the process of transforming green resources into green assets.
China is operating the carbon market while carbon emissions are still rising. It's necessary to carry out institutional innovation based on China's national conditions to ensure the stable operation of the carbon market.
Meanwhile, China is hard at work with the international community, co-chairing the Nature-Based Solutions Initiative with New Zealand at this year's United Nations Climate Action Summit. The coalition brings benefits to biodiversity, marine, and wetlands conservation. Officials say they have high expectations for the upcoming United Nations Climate Change Conference in Spain.
This year's negotiations are crucial. We aim to complete negotiations on the remaining issues of the implementation details of the Paris Agreement. We will urge developed countries to bridge the gap and fulfill their commitments and promises.
The United Nations Emissions Gap Report released on Tuesday has set new targets for tackling climate change, urging all parties to fulfill their commitments under the Paris Climate Agreement. Officials say Beijing is ready to firmly support the full implementation of the agreement alongside other cities and nations. Wei Jingrui, CGTN, Beijing.
Well, let's stay with matters climate. One of the biggest challenges facing the African continent is acute water shortages. However, over the years, there have been some efforts to solve this. Here's CGTN's Penina Karibe exploring how one Tanzanian low-cost water filtration system, NanoFilter, is now transforming lives across the continent.
You offer one of the most precious commodities in Africa, and that's clean water. What are the solutions that you offer and the areas that you target to?
I have safe and clean water services, starting from the filters themselves. And we have communities that cannot afford buying the filter itself. So we set like filtration systems within their community. If you had your bucket, that bucket of water, that bucket that you used to boil water and just save your water in there, you can use the same bucket to get water just next to your house and get clean and safe water at a price that is uncomparable. it's like 10 times cheaper what you could imagine of boiling or buying safe and clean water. So that is the service I provide, and on top of that now, with the filtration, with the centers that we put around the community, we have been able to also empower our youth, and like all the 90 stations that I have are run by young ladies from 18 to 35, and I'm so proud of that.
What are the challenges that hinder access to safe drinking water in Africa, and how can these challenges be overcome?
It's a very wide topic, because sometimes we blame our governments that they don't do what they were supposed to do. But being in the industry, I have discovered a lot. One thing that is a big problem is the dispersed population that we have. Our residential areas are like one person is here, another community is there. So the infrastructure becomes very expensive to put up. So that is one of the biggest challenges. And another thing is the education. Some communities would afford to have, you go like in Maasai communities, they have the money, but